Welcome back to a brand new YouTube video. In today's video, I'm going to be going over how I made over $4,500 in one single trade. I'm going to show you the executions and I'm also going to show you why I took the trade. I'm also going to be showing you how you can use this strategy for yourself. So without further ado, let's get straight into this video. Drop a like, comment on this video, and let's get straight into it. Now let's jump straight into the charts and break down this trade that I took. Now the main concept behind this entire strategy and this entire trade I took is a news high or a news low. Okay, now if you don't know what those are, then essentially a news high and a news low is the candle that forms when a big news gets released. So if you go into Forex Factory here, you can see that red folder news is expected a high impact on the market. So whenever one of these news events happens, typically we will get a large candle in the market like this one here, and then we are simply going to target the high or the low of that exact 1 minute candle. So once I saw that the news low had already been taken, okay, pre-market, then I knew that for the rest of the session I was going to be targeting this news high, okay, and this applies to any red folder news candle as long as it looks abnormal and the candle has got a large wick or a large body. So jumping into it, now that we know our bias is bullish because we're going to be targeting this news high, all we've got to do is look for our entry model to actually target this news high. And the first thing that I need to see before taking any trade is a sweep of sell side liquidity. Okay, so what that means is we need to see price come down, take out these stop losses which are resting below here, okay, and then what we want to see is a reversal back up to this news high. So you can see that this is pre-market. It's actually 9:21, so about 10 minutes before New York opens. So I trade 9:30 to 11 a.m. New York time. So I was simply just waiting and being patient to see how the market opened up. So as I play through, you'll see New York opens up with this candle, okay, and we take out this level of sell side liquidity. Okay, so that's the first step of the strategy, and that's the first thing you need to look for. You need to see a clear sweep of sell side liquidity or buy side liquidity, depending on where you're targeting. In this case, because we're looking for longs, we need to see sell side get taken. Okay, pretty simple. Now that sell side liquidity has been taken, this is where we move on to the second step, which is identifying any clear and obvious fair value gaps that were left behind during the sweep. Okay, this is extremely important. This fair value gap was left behind during this liquidity sweep, okay? If you notice that this exact candle is the one that took the liquidity, that is also extremely important. So this bearish candle is the one that took this liquidity. So now that you've identified your fair value gap that was left behind, okay, all we need to now do is see if this fair value gap gets respected or disrespected. And what that means is price going to come up and respect this bearish fair value gap and continue lower, which of course is not good for long positions, or is it going to come up and disrespect it, which is what we're looking for, and actually close through it, so then we can enter a long position and target the news high. Now that is the entry model that I use every single day, and it's also the strategy that I teach to all of my students. We use the inversion fair value gap model, and this is a perfect example of why you should be using it as well. So as I play through, you'll see that in the next two candles, price actually comes straight up and inverses this bearish fair value gap with displacement and closes back above, okay? So what that means is you can see the momentum has come straight back up with this big bullish candle, and then we've actually closed above this singular bearish fair value gap. So as you can see, this is basically a 2 risk to reward. It's 20 points with a less than a 10-point stop loss. So this is where now I would enter a long position. My stop loss goes a candle close back below, and we simply target the news liquidity. And you can see within one candle, within 1 minute, we actually shoot straight up and take out our full TP with zero drawdown. Okay, that happened within about 20 seconds. And I was done for the day. I made $4,500 off that one trade, and it took literally 30 seconds. Now, if you've watched my videos before, you'll know that I never show one trade example because it's not really believable. So I'm going to show you another trade example right now, just so you know that this strategy is actually very profitable and it does work. Okay, so as you can see in front of you right now, we have got another winning trade, which was from yesterday and the day before, so 2 days ago from the time of recording this video, and that news trade was the day after this one. Okay, so we caught a 3-hour trade on the Tuesday, and then that news trade I've just shown you was on the Wednesday. So we caught 2 back-to-back wins using this exact strategy. So let me break down this trade exactly how I have just done it on the previous example. You need to identify your target. Now this one is not using news liquidity, but is the same concept. So you can see that we have actually got a nice swing high in the market up here that hasn't been taken yet. Okay, we have not even come up to it, and we are basically forming a trend line which is extremely low resistance, and we should run through it. So now that we've identified we've got a good area of liquidity, we've got a nice trend line, and we've also got a really nice swing high. This is where we're going to be looking for longs. Now, the reason we're looking for longs is because we are extremely low in discount. Okay, you can see we've dropped heavily already during pre-market and during the open of the session. So this is now where we're looking for longs to actually come back into discount of this overall range. So you draw your Fibonacci tool from the high of the range to the low of the range, and here you get your discounted area. So this black line is 50% of the range, so we're going to be targeting that. Now that you've got your target, so we know we're targeting this 50% level, you've got your top, which is the swing point, and you've got low resistance liquidity. This is all setting up for a nice long position. Now, going back to the strategy, the first thing we need to see, of course, is a sweep of sell-side liquidity. So here you can see I'm marking out a key swing low in the market, and all we're going to do is wait for that to be taken, which we do get here. Okay, now here you can see we have actually swept sell-side liquidity, and it's very clear and obvious. Okay, we've clearly taken out both of these lows, and we've also left behind our clear and obvious gap. Okay, so this is now where you've got your two first steps of the strategy. You've got your sweep and you've got your fair value gap. That is all we now need to enter a long position. Of course, with the displacement and with a candle close, then we can enter. But this setup is exactly what you want to see. What's also important to note is that we are actually delivering out of a fair value gap to the left. Okay, so you can see we've come down and we've actually tapped into this unmitigated bullish gap to the left. And not only that, but it's the last fair value gap in the leg. Now, for some reason, the last fair value gaps in the leg are always the strongest. So this is extremely important as well. You can see we're perfectly delivering off the 50% of this fair value gap. So now simply all we wait for is a displacement candle through this fair value gap, and we enter a long position. And you'll see within two candles, we come straight up, perfectly delivering off that 50% level, and we inverse this singular bearish fair value gap. So this is now where I enter a long position. I target buy side liquidity. My stop loss goes a candle close back below, and we can target either the 50% of the range or the swing point which we marked out. In this example, we will target 50% of the range, and you'll see when I play it through, we literally come straight up and take out our TP. So there we take out our TP. This is where you would close 80% of your position, even 90% of your position, and leave the rest to the discount. So that is a 47-point win, 2.5 risk to reward, and we would have left the runner to the overall discounted range. And unfortunately on this one it does get stopped for break even. But a lot of the time your runner will continue and you will get your full take profit. Once again, if you do like how I teach, then I've got a trading Discord in the description. Please join that and make sure you check out all of my free content inside. Thank you very much for watching. Please like the video, subscribe to my channel. I'm trying to get to 1,000 subscribers, and I will catch you all on the next video.